Hi everyone, welcome back to the channel. Today we will analyze TCS quarterly FY23 FY26 results announced on for the quarter ended December 2025. Now we'll try to break down in a very simple and a practical manner what went right, what went wrong, and most importantly, what we as investors should focus on going forward. Okay, so let's get started. Now let's focus on the headline numbers. Now I have retrieved this details about the quarterly results from the TCS websites itself. Okay, so let me share the screen and yeah, here. So if you see on the TCS website, this particular quarterly result is available for everyone. Now TCS reported 67,087 crores for this quarter, okay, showing a growth of 1.9% quarter on quarter and almost 5% year on year growth, which is good, okay, compared to the industry. The earnings before interest and tax was 17,469, which is 1.5% quarter on quarter growth and 4.8% year on year growth, which is pretty strong. Now, the main culprit is what I understand is this net profit number, which is reduced almost to 10,720 crores. Okay, which we compare it with the previous quarter, uh, which is lesser than the previous quarter, almost 11.6%, and minus 13.8% if we compare it with the year on year quarter. So and the EPS has dropped to 29.45, okay, versus what it was in 33.37 in the previous quarter. Okay, we will deep dive into the other slides what went wrong and what was the reason behind the dip into the net profit. But before that, we need to understand what is the core operating performance of the company. Now, if we ignore those one-time factors and focus purely on operations, TCS remains extremely strong. The company continues to maintain the operating margin of 26%, which is industry leading, and the cost control is solid, employee expenses are stable, and there are no signs of stress from attrition or wage inflation. This clearly tells us that the TCS execution capability and pricing power remains intact. Okay, so let's go to the next slide and we'll try to deep dive what were the exceptional items, the key impact which brought the net profit down. So one reason was the statutory impact of the new labor codes, which is impacted, okay, so which generated an expenses of 2128 crores. Then they have kept a provision of US legal claim case of 1010 crores and restructuring expenses to 253 crores. Okay, so generating a total exceptional impact of 3391 crores. So these are all one-time non-operational charges, and without these exceptional items, TCS's profit would have been significantly higher in the line with the previous quarters. Okay. Now let's deep dive into the US legal case CSC. Because of this particular legal issue, the market sentiment becomes a little cautious. Now, TCS has provided 1010 crores conservatively for the long running trade secret litigation case in the US. Now, company has already issued the letter of credit and is continuing its appeal process. So, there is no threat to the cash flows or balance sheet. Okay. Now, moving ahead, we'll understand the revenue contribution and the business performance segment wise. So their strongest segment was BFSI with 25,809 crores worth of revenue which is generated from BFSI domain, versus consumer with 10,581 crores, manufacturing 6580 crores, which is their trend is flat. Life science and healthcare is improving with 7,608 crores, and CMT Tech Media 9,902 crores, which is weak compared to last year. So overall diversification across the industry is clearly helping TCS to absorb sector specific weakness. Okay. Now let's move on to cash flow and shareholder returns. Now one of the strongest positive of this results is cash generation. TCS has announced 57 rupees per share dividend and having a total cash flow of 95,409 crores. So company continues to hold this massive reserve, giving it unmatchedly financial stability. Okay, and this clearly shows that management confidence is really intact. So overall market interpretation is, for the short term there may be a possible pressure due to the EPS miss and due to that case, but from the medium to long term there is it clearly the stable earnings and dividend report is really good. Okay, so however, uh, if the exceptional items fade away, the earnings normalization is very likely, and dividend yield and margin stability should act as a strong downside support for the stock. Okay, so to sum it up, TCS's quarterly Q3 FY26 results are operationally strong, but technically little weak due to those one-time charges. The core business remains stable, margins are intact, and the cash flows are strong. Okay, and the balance sheet is rock solid. So for long-term investors, this is a very good stock. Thank you so much.